Hello, everybody, and welcome back to another daily update. My name is Akash, and today we're going to be taking a look at Bitcoin. And basically, I wanna rant about what I feel is happening in the market, give you my take on the market, and my game plan for the next few days, basically the weekend, right? So before we get into that, please make sure to click this link here and join my Telegram channel where I post setups. Yesterday, I posted this particular setup for optimism perp, where I kind of mentioned that honestly, like a 13% pullback isn't bad here. And then 8 hours later, you get that perfect 13% dip on optimism. And I book a nice little short trade for optimism. And earlier today, I basically posted this ENS trade on a 15-minute time frame. It was a good scalp. It was a good 2.5 hour scalp. Where I expected the price to go up, sweep the equal highs, and 8.5% upswing is what I expected, right? And as you can see here, right now the price has hit its target, and although I didn't get a fill, like I was expecting to get in a little lower, but the price kind of got there was a lot of buying pressure, so basically the price, I didn't get my fills. Either way, right, if you're interested in this sort of content, please make sure to go ahead and join my Telegram group. And if you click this link here, it will take you to my YouTube channel where I post my take on the market. Right, so today we're going to be discussing Bitcoin and what's happening with it, right? I already have a new Bitcoin chart drawn up here because I want to show you guys something interesting that I just noticed, right? First off, we have the moving average, which is a 30-day exponential moving average, as you can see here, EMA 30-day. Although we're on a 4-hour time frame, I've adjusted this EMA to show up on the daily time frame. So what's happening here? Like I've already stressed enough the importance of this 30-day moving average, right? Once the price broke below this on somewhere in 6th April, ever since then, any retest of 30-day moving averages have basically been rejected, right? So with that in mind, it's a really good trend indicator, and that's I wanted to take a look at what was happening after the price kind of moved above that, right? So this was the first time price moved above it on 18th July, right? And then there was a retest followed by a good little upswing. And what happened later was that the price came back, retested this, formed a double top, and then crashed below it. Now I'm expecting something similar to play out, right? So the price moves above it. Although we didn't get a retest here immediately, the price did go on to form a top. Now that we're getting a retest of this level here again, the setup that I see here right now, basically, this particular thing where, hold up, let me just, reminds me of what's happening here. Right, so we have one swing high formed followed by a down move. So we have this swing high formed here followed by a down move. Let me just expand this. All right, so basically swing high, retest of 30-day moving average, double top, boom, crash. Now I'm expecting something similar to happen, right? This is what I'm expecting, guys. There are a couple of factors that kind of play into this fractal, right? The first thing is both times the price has moved above the 30-day moving average. Second factor is that there is an incentive for the price to not go beyond this level here at 23.6, which is basically this H4 demand supply zone that you see here. Right, so now that I've mentioned my take on the market and like what I think is going to happen, what I'm going to do is basically short Bitcoin here and wait for BTC to come fill this FVG that is present here at 21.5K roughly. This is my game plan, right? But you don't just look at some structure and then formulate a trade, but you also try to kind of disprove it, right? What are the factors that could invalidate it? What are the factors that could push Bitcoin not just into this particular double top formation here at 23.6K, but what could basically invalidate it, right? Which brings me to my 1 hour time frame, which basically shows that there is a temporary FEG on a lower time frame here at roughly 24.3K, right? With that said, let's get back on a 4 hour time frame, right? You can expect Bitcoin price to even go up to this level here, but In that case, you could just probably put your stop losses just at this particular swing high formed on 30th of July at 24.7K. Now, that said, I do want to mention this particular downswing here. Basically, the crash for Bitcoin started here, right? So I'm going to use my fib extensions to mark out this expansive move as a single entity. And if you look at it, the reason why Bitcoin price got rejected at 50 retracement at basically 24.7K was the presence of this midpoint of the massive move that you saw happen between 7 June and 18 June. So basically, price whenever price moves violently in a single direction, right, it tends to revert to the mean as in the midpoint of this entire move, right? The price goes back, retest this, and then it does that, right? And the reason behind me using 79, 70.5, and 62 is to basically mark out the levels that are beyond the midpoint, right? For example, if the price goes up, right, I mark out my fib extensions, I mark out the 50 fib, and beyond 50 fib I have this buy zone basically, which extends from 62 retracement level to 79 retracement level, which basically indicates that when price moves above, right, like it's trading at a premium, right? So when price goes back to the 50, it means that it is now trading at a fair price. But if price goes below 50, it means that it is at a discount now. So these levels basically are an extremely accurate levels to indicate when the price is in a deep discount mode, and it basically coincides with a lot of reversals taking place here, right? It's not my invention or discovery. Basically, it's this particular concept has been taught by a lot of well-known traders like ICT or the other guy. I don't remember his name. But yeah, so basically, there's no incentive for price to go beyond 50 retracement level here, which is 24.6K. But we have a stop losses at 24.7K. So technically, this trade is safe, but the risk to reward ratio is currently saying that it's at 1.47, which is okay. I honestly don't mind taking this trade. But if I were to kind of tweak it a little, I could probably just wait for the price to come back and retest this double top formation here at 23.6. But as you can see here, the last time the price formed this fractal, it basically swept the previous high formed here on 23rd July. So assuming we, if not a sweep, right, even if a retest of this seems reasonable. So now we're looking at a 2.02 hour trade, which is good, right? I would want to end my session here, but I do want to mention, right, like if you look at what's happening here, I've been talking about this particular chart for quite some time. The So let me just quickly give you an outlook of what's happening here, right? Price crashes, consolidates, crashes, consolidates, crashes, consolidates. Now there's no hard and fast rule that the price has to stop now and it has to reverse, right? Similarly, there is no indication that the price should reverse here. Like it could keep going down as well, right? So that said, I want to talk about how the midpoint, that is the POC, the volume point of control, has played an important role in basically the breakdown, right? So in each of these fractals that I've considered here, the volume profile is basically drawn from the peak of an expansive move followed by a consolidation up to the point of a breakout, right? And as you can see here, every time the price comes during its last leg, the price comes towards the point of control, there is a little bit of struggle. And finally, once there is a rejection, the price swiftly moves down. Same here, there was a lot of trouble. This is a trouble area, after which the price moved down. And now we've retested this level. Actually, it's changing every single day. So now you can see the volume point of control is moved to 21.1K. So I feel like this is where Bitcoin price is heading. And on top of that, like if you look at it, 21 points, look, where is this? 21.1K. So let me just mark this out here. 21.115. This is not an FPG, so we'll just take that out. Right, so actually, let's make this POC so I can remember. Right, so this seems like a really good level here, but there is a double bottom formation here, which indicates that there is quite a bit of liquidity resting below this level. Hence, my trade is it can be broken down into a couple of things, right? If we get our entry filled at 23.6K, my take profit level one would be this one at 22.5K. This will be my TP1, right? Beyond this, I would be looking to book my second take profit level at the FVG. The third one basically is at the retest of this particular level here. This is what I'm expecting. Basically a whole correction of this particular move all the way down and then some. So yeah, this is my take on the market. So I have closed all my long positions that I opened earlier today. But the only thing that could potentially ruin my setup is the 200 week moving average that you see here, which is currently at 22.7, 22,794. So let me just mark that out as well. Hold up, not this. Right. So this is it, guys. This is my take on the market. There's a fractal formation happening here across at least around the 200 30-day moving average. So yeah, let's see how it goes. I'll be updating my take on this particular setup and how it goes in my Telegram group. So if you're interested, make sure to click this link in my bio here and join the Telegram group. That's it for today. Have a great day and stay safe. Peace.